Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Wednesday afternoon for St. Patrick's Day, we have Ryan McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq-100 weekly performance, as well as how the index reacted off of the FOMC meeting and Federal Chairman Jay Powell's comments in the press conference. Ryan, it's great to see you as always. Let's go through your first couple of charts here, because we can see Nasdaq-100 performance and where Powell's comments impacted the index.
Yeah, absolutely. Thanks, Jill. When we look at the week prior, a good week for stocks all around. You had QQQ and QQQM up 2.81% for the week, better than the S&P 500, which was up 2.3%, and S&P 500 value up 2%. So, the first week in a few where we saw QQQ outperform both the S&P as well as S&P 500 value. But essentially, we had sort of this push and pull as these inflation worries would creep up, back off, creep up, with all eyes basically on today. Besides from being St. Patty's Day, it is a Fed day, and this was the big story. So the Fed essentially confirmed that the rise in some inflation indicators are short-lived. I think that's kind of the key takeaway from today. Their measure of inflation is running below 2%. Although it's forecast to rise to 2.4% this year, the core at 2.2%, and next year you'll see that drop back down to 2%. There are 7 officials that are seeing higher rates by the end of 2023. That's up from 5. But the Fed's stance of near zero interest rates is maintained through, again, at least 2023. They increased their GDP forecast to 6.5% this year. That's up from 4.2%. They see unemployment falling to 4.5% this year and 3.5% by 2023. Asset purchases are remaining unchanged at 120 billion, and they said indicators of economic activity have started to turn up. So essentially, the accommodative stance hasn't really changed. From Chairman Powell's press conference, he talked about the increase in prices in 2021 as being transient, and that it won't meet the Fed's inflation goal. The economy is a long way off from the Fed's dual mandate of employment and inflation goals. He also received a question about tapering and said it's not really the time to talk tapering. They're going to give as much advance notice of tapering as they can. And you can sort of see that that's where NDX, or Nasdaq-100 index, really took off from a price performance standpoint. Just before we started chatting, it was up around 60 basis points for the day. That's up from a low of being down 1.5%. Around the announcement or the statement being released, it snuck up to around flat for the day, backed off a bit, and then during the press conference, particularly it seemed around that tapering talk, that's when it turned positive. So, I think the main takeaway here is that the street is still very much focused on inflation, but from a Fed perspective, they're going to remain accommodative here.
And Ryan, to wrap up here, let's take a look at your final chart to see what sectors are participating in the performance.
Yeah, over the last week, you saw QQQ led by tech and communication services. Maybe just some relative rotation there, again, on maybe inflation fears backing off a bit. You saw energy take a breather. It was the only S&P 500 sector to be in the red for the week, while financials and materials were the second and third worst, although they both were in the green. Recall QQQ, the Nasdaq-100, does not have exposure to those sectors.
All right, Ryan, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.